Also welcome in Sunita Reddy, Managing Director, Apollo Hospitals, who's with us to discuss the earnings this time around. Sunita, thanks for being with us. Let's talk about the results. What's led to the kind of growth that you've seen above 20% this time around?
So for revenue, clearly in the hospitals it was more volumes coming in because we actually filled out the specialities by adding more doctors. We've added about 52 consultants, which really brought in significant revenue, especially in all our new hospitals. We also undertook a cost cutting exercise which improved our margins significantly. And for the pharmacies, what we did is we added 152 stores, but we improved the margin to 5.2% by looking at the way that we stock the stores and to see that the prescription fulfillment ratios have improved.
And the company has delivered strong operating performance with margins improvement as well, witnessed for the fourth quarter in a row. Do you think that this will continue?
So the margin improvement, I mean, if you were to look at the hospitals, we said that mature hospitals will move to a margin of 23%. Currently, we've achieved from 21% last year. There's almost 100 basis points improvement. We're at 22%. We believe that going forward, we will increase this again. We will get another 60 to 80 crores that will come from cost saving. The second is that we've recovered a lot of the guarantee money that we paid in the initial years for the new hospitals. And I think having looked at the fixed costs, we're just driving the revenues and driving volumes and the quality of the case mix. And all this is really contributing to better margin profile.
Okay, could you tell us about the margins at the new hospital, and have most of the hospitals achieved now your break even, especially the new ones?
So we've added 30% capacity. If you were to look at Apollo, it's about 30% capacity. We are looking at what is the impact on operating cash flows. Clearly from the increase in margins, since we've met all our fixed cost, the improvement in margins from the current EBITDA margin of 7% moving to about 12% next year, we should see positive cash flows emerging from that. On the whole, I think we will be generating free cash flow this year, because this is you can see it from the fact that our ROCE has improved significantly from 10.1 to 12.3.
Right. So tell us, what was the performance of the pharmacy business, and do you expect it to post in better numbers? Because, you know, pharmacy traditionally also has been a high growth segment for you.
Traditionally, we've grown at about 19 to 20%. More importantly, EBITDA has grown by 34%. So again, I think you can expect to see growth in top line at about 19 to 20% and significant growth in EBITDA, because if you look at 60% of our 3,400 stores, they're already at an EBITDA margin of 6%, and the really mature ones are at 8%. So this quarter, while they may have contributed about 55 crores of EBITDA, we believe it will significantly start contributing, and we do plan to add a digital layer which will take the revenues up further.
Sure. Okay, what's the update on Ayushman Bharat? Has that made a dent to any slowdown? And you know, volumes for the sector, do you think they're going to benefit from this as well as overall volumes pick up?
So I think for those companies that have hospitals in Tier 2 and Tier 3 that were built at a low cost per bed, these will definitely be able to, you know, you don't expect to see contribution, but it will cover the fixed costs. So we don't expect to see great margin improvement unless we learn how to do large volumes of Ayushman Bharat, and unless the government also looks at repricing some of the work that they're compensating us for in Ayushman Bharat. So, but clearly we're very hopeful, because the signal of additional spending and increasing healthcare spend is definitely going to improve the performance of many of the hospitals.
Right. How do you see Modi Care influencing your numbers going forward, and how is it that it can add to your growth and margins?
So margin improvement, I can't look beyond the next 12 months, but let me say on Modi Care, the commitment to improve healthcare spending from the current 1.7 to 2.7 of GDP, or doubling it, I think will be a step in the right direction. Hospitals, like I said, that have been created with a low cost per bed should be able to succeed. And the one thing that we want to provide is quality health care. So we do hope that they look at revising some of the procedure pricing. With regard to our pledge, we have brought it down by 10%. We're looking at a further reduction in September when there is a liquidity event. We should bring it down to about, bring it down by another 40 to 50%. And then further on in the next 12 months, we hope to remove the pledge.
Okay, Ms. Reddy, great to have you on the show. Thanks so much for taking the time out and speaking with us.